Today, I'm thrilled to take you with me as we explore the Gonneville deposit, which doesn't look like too much just yet, but it is Australia's largest ever discovery of platinum group elements and is one of the biggest critical mineral deposits in the world. Chalice is on track to develop a long-life mining operation here, which is projected to generate billions of dollars for the Australian economy and thousands of jobs. Now I'm standing here in the heart of what one day will be the Gonneville deposit with Alex Dorsch, the Managing Director and CEO of Chalice Mining himself, to discuss the outlook for the company, what's going on right now, literally behind us, and what we can expect over the next 12 months. Alex, thanks for joining us.
Thanks, Grady.
First of all, can you tell us, for our investors who may not know the Chalice Mining story, can you tell us about the company and where it's at and where it's heading in the future?
Yeah, so Chalice is an ASX 300 company. We made a very large PGE nickel, copper, cobalt discovery in 2020. It's a very significant resource just outside of Perth in Western Australia. It's a greenfield project, so it's a very exciting project, obviously very relevant for the energy transition, but also very relevant in that there's not a lot of palladium projects out there, especially on the ASX, and certainly not many in the Western world. We're in the middle of a PFS at the moment, a pre-feasibility study, and we're looking to get the project developed sort of towards the end of the decade.
Now, you recently released an updated resource to the market, and you wanted to let everyone know about what's going on out there. Now, can you tell us, in terms of the critical minerals space in a global context, where this stands in comparison to existing deposits out there, and what's your timeline to production?
Yeah, so this is a very significant scale deposit. It's one of the largest, what is the largest undeveloped palladium, nickel, copper deposit and resource outside of Russia and South Africa. The PGM production is really dominated by South Africa and Russia, so there is a real strategic sort of urgency in the Western world to bring some Western PGM projects online. It's a very large resource. Like I said, a lot of the value from it comes from palladium, but it also is a very large base metal resource as well, quite a significant endowment of nickel, copper, and a small amount of cobalt as well. So really, it's a matter of really getting our engineering and studies work completed at the moment. We have done that new resource update, which was really trying to focus in on, can we selectively mine the high-grade portion of this resource? There's about 1/10 of the tonnes in the resource that have about 2 to 2.5 times the average grade of the resource itself. So that's really the focus for the initial development, is to really sort of selectively mine those high grade tonnes that we're standing on today.
Now, you recently partnered with Mitsubishi. What does a company like that add to the value of Chalice?
Look, Mitsubishi is really one of those fantastic tier one type strategic partners. They're involved in a minority capacity in some of the largest mining joint ventures anywhere in the world. They're a fantastic long-term mining investor and partner. They're also, out of all the Japanese trading houses, they're probably the most active in PGMs, but they're really looking to grow quite materially in nickel and other battery metals. So they see, I guess, the future that we see here, that there is a shortage of real large-scale projects in the West. So they're looking to get involved early, and they're really bringing a marketing and a downstream lens to the project. We can obviously take care of the resource, the upstream end, the processing, but really what they bring is marketing expertise and ultimately finance. And that's really what attracts us to Mitsubishi, is that Mitsubishi will enable, I think, other parties in Japan as well to really see the long-term value here of this project over decades. And bring very, very competitive finance to the project in due course.
Now, as a group before, we were talking about the recent depreciation in the nickel price, and you obviously have a nickel deposit just here. One of the questions was about, why did you ever consider removing the element of nickel and just not focusing on that at all? And you did mention that you want to pursue that. Why do you want to pursue continuing with nickel, and do you see an upside in the future?
Look, nickel is going to be a byproduct or a co-product, really. It's going to be a palladium project, really. Palladium is going to be responsible for something around 50% of the revenue. Nickel's going to do something like 25%. So it's an important, I guess, co-product for the operation. Our view at the moment, obviously, there has been a big supply response in Indonesia, but obviously not all of that supply response is very low cost, and it's not really environmentally responsible and has some sustainability challenges. So over the long term, we just think the nickel price is probably more range bound according to what happens to their economics. And we think basically, our project will be a function of, palladium prices number one, but nickel prices obviously number two. So it is an important part of the mineral suite here that we're standing on. So we keep a close eye on it, but really I think the focus on the moment for investors is really about the outlook for palladium.
And any upside potential in nickel definitely adds to the value of Chalice in the future.
Absolutely. And as we all know, there are commodity cycles. So
yes,
at the
we're
moment,
in the heart of one right now.
nickel is in very much the bottom of the cycle.
Yeah, absolutely. Now we are just an hour out of Perth. How does that play into the cost management and reduction of costs with all the infrastructure, the employment and drive in, drive out, as opposed to FIFO? That really reduces costs. And how does that play into Chalice's outlook?
Yeah, look, it's a huge factor. We're about somewhere between 35 and 45 minutes drive from the sort of outer metropolitan area of Perth. So we do think a large portion of our workforce will be drive in, drive out. So that does have huge cost advantages. It helps as well because, we want the workforce to reside locally. It's about building up, long-term sustainable communities as well. I think one of the challenges with FIFO workers is that you do get a very transient population in these remote communities. So I think it's a benefit that we see, the government sees very much as well. What's hard is, I guess, knowing exactly how much, cost impact that has because there's not a lot of analogues. There's no real other project like this as close to Perth. So that's a factor we're just going to learn about over time and really, we think will be a material sort of advantage for this project.
Now, for our investors, you did mention palladium is the key commodity at this deposit right now. We had gold is obviously the number one commodity right now, copper last year and kind of coming through this year, lithium back in the day. Why is palladium rising up the ranks and how does that change the face of Chalice?
At the moment, palladium is in a funny spot. You've got some geopolitical forces at play. Russia is the biggest producer of palladium, but the West as yet has not sanctioned Russian production. So China is basically taking all that metal and then whatever is excess to China's needs hits the spot market. So it's in a strange position. It's also got a very, very large net short position from financials or non-industry participants. So there's, I guess, a lot of hedge funds and sort of commodity traders betting against the metal right now.
Doesn't always
but
help.
that makes it vulnerable to short squeeze and sort of, rapid improvements in the price. So we're keeping a close eye on that. The other factor is obviously South Africa. South Africa is the other big producer of palladium. Palladium is really produced as a byproduct of their operations. They're mostly platinum operations, but a lot of those operations are making a loss at the current price. So it tells you it's not a sustainable price environment that we're in today. And unfortunately, Chalice's share price is reflecting, that unsustainable spot price environment. We're making plans with our operation to operate, obviously, from 2029 onwards. So we think the price environment today really has very little bearing on sort of our plans in terms of a 20 plus year operation.
What role does palladium exactly play in that green energy transition?
So about 80% of palladium goes into auto catalysts, so basically internal combustion and hybrid vehicles. At the moment, battery electric vehicles or purely electric vehicles, the growth has stalled.
It's definitely not favourable right now.
They've got some challenges around the upfront capital cost, but also more importantly, the infrastructure required for charging and et cetera. So really what we're seeing at the moment is a huge, growth in plug-in hybrid vehicles and extended range EVs. Those have an internal combustion engine in them. They're typically a petrol engine, so that petrol engine requires palladium. And actually hybrid engines require even more palladium than a standard internal combustion car. So look, that is almost like a transition technology if you think about it that way. And I think what's happened over the last few years is people have realized that it's actually quite challenging to pivot from pure ICE to pure BEV in a short time period. It's probably a bit unrealistic to think that the world can just stop making internal combustion engines. And so hybrids provide a transition technology, and we think it's going to be a multi-decade sort of transition, which aligns well for our project.
And so geopolitical tensions, we did touch on that, and obviously Russia's main drive of palladium. How does the outlook for the US election and other geopolitical tensions in the world and geopolitical issues that are arising, how does that play into the outlook for Chalice?
I think there's a couple of things to look out for with the US election. Obviously, Trump has made some comments that you'd probably consider anti-electric vehicle and anti-subsidies for the energy transition. I think that could bode favourably for palladium. If the US government really puts a pro-policy settings in for the oil and gas industry, that could put downward pressure on the oil price, and that could further incentivise basically people going to hybrids and internal combustion. So I think that's the area that we've got our eyes on. We don't obviously know the election, how it's going to play out. What we're hearing from others who are keeping an eye on geopolitics and that election is, there's a very much a changing of the view around palladium. The idea that it's just going to be phased out is not as realistic as it once was thought. So I think all those factors combined, there's a lot of change coming in the second half of this year, together with what looks to be a couple of rate cuts from the Fed Reserve that could really bring, I guess, a more favourable outlook for new car sales, which typically drives palladium demand. So yeah, we're quite positive in the near term around the price of palladium.
And finally, the market has been pretty tough to Chalice recently. There's no denying that. Why do you think the market has got it wrong with the share price depreciation?
Look, I think the market is following those spot prices, and clearly nickel and palladium are at 5 or 6 year lows.
Yeah.
No doubt, any greenfield project or any sort of new source of supply is going to be treated, according to sort of the prevailing spot price environment. So I think it requires, I guess, a long-term view on where those prices are going. I think there just generally is just a lack of greenfield projects in the mining industry, and an even smaller amount of projects in the critical minerals industry. So the idea that prices stay low forever is just not realistic. So I think that is being overlooked a little bit by the market today, and market has been driven by short-term forces as opposed to long-term forces. The reality is that this project is very, very unique as well. So, and it's very large scale. So it will produce over many, many cycles into the future. The challenge for the investor, as well as the opportunity, is to work out sort of where you are in the cycle and then act accordingly.
Alex, thank you for your time today. Let's go have a look at the Gonneville deposit and what is going to be the core assets we're going to have a look at now.
Thanks, Grady.